All right, let's jump straight into today's explainer. If you've ever wondered how high net worth portfolios scale up so incredibly fast without exposing themselves to the wild, everyday swings of the stock market, you are absolutely going to love this. We're looking at a fascinating financial model from Imperial Asset Management. Specifically, it's a compounding strategy they call the 5-year Wealth Accelerator, which uses a mechanism known as the Imperial Sweep. We're going to break down exactly how an initial $500,000 investment is mathematically engineered to nearly double over a strictly defined 60-month timeline. Get ready because the math on this is just beautiful.
Here is our roadmap for today. Number 1, the $500,000 foundation. 2, the monthly sweep mechanism. 3, 5 years of compounding. And 4, the Imperial Advantage.
Section 1, the $500,000 foundation.
So the journey kicks off with a base funding amount of exactly $500,000. Now you might be wondering why that specific number. Well, in the Imperial Asset Management framework, hitting this $500,000 mark is the magic key. It unlocks their 12% annual return tier. And when you break that 12% down, it gives you a very clean, highly predictable 1% monthly yield. That predictability? That's the bedrock for everything else we're about to look at. To really appreciate this, we have to look at the sheer scale of the advantage here. Take a look at the right side. You've got your traditional safe haven assets, right? CDs, municipal bonds, standard fixed income stuff. Historically, these are yielding under 6% a year. But on the left side, the Imperial model is throwing off a 12% advantage. Because of that 1% monthly yield on a $500,000, the investor is locking in a consistent $5,000 monthly dividend starting right in year 1. You're not waiting around for a quarterly or annual payout. This is $5,000 in cash flow generated every single month.
Section 2, the monthly sweep mechanism.
Okay, so we've got a $500,000 principal generating $5,000 a month. But look, we aren't here just to maintain wealth. We want to accelerate it. And that brings us to the core engine of this whole thing, the monthly sweep. It's basically like a snowball rolling down a hill. Instead of letting that $5,000 sit idle in a checking account or, skimming it off for lifestyle expenses, this strategy demands that you cleanly sweep those earnings right back into the principal. Every single month. You're literally feeding the machine its own output so you can compound the growth.
Let's walk through how this relentless loop actually works. Step 1, you earn your 1% monthly yield, which starts at $5,000. Step 2, you execute the sweep, pulling those earnings right back into the core principal. Step 3, and this is absolutely crucial. Next month, your 1% yield is no longer calculated on $500,000. It's now calculated on $505,000. The month after that, the base is even bigger. Your money doesn't just sit there. It goes to work recruiting more money month after month after month.
Section 3, 5 years of compounding.
Let's visualize the trajectory of this disciplined sweep. In year 1, your base is established, right? The snowball starts rolling. But by year 2, the growth visibly accelerates because those first 12 sweeps have really bulked up your principal. By year 3, we hit midpoint scaling. The compounding effect is completely pulling away from standard linear growth. Through year 4, the momentum is building heavily. And by year 5, you've entered peak compounding for this specific roadmap. Every single month, the principal steps up, the dividend steps up, and the next sweep is even larger.
And here is the mathematical climax of that 5-year journey. $908,348. That's the final projected value of the account after 60 months of disciplined compounding and reinvestment. What's really wild here is the composition of that number. The final principal alone, just the core investment amount, has grown to an astonishing $905,000. By simply sticking to the sweep, the core investment amount has nearly doubled in just half a decade. No crazy stock picks required.
But it's not just the principal that blew up. Because the principal nearly doubled, the monthly payout generated by that 1% yield has also stepped up in a huge way. Think back to our starting point. We were getting $5,000 a month in year 1. Well, by the end of year 5, that monthly payout has surged to over $9,000. If an investor hits this 60-month mark and decides, you know what, I'm going to stop the sweep and just take the income, they have completely transformed their passive cash flow.
Section 4, the Imperial Advantage.
Now, if you're a critical thinker, you're probably asking yourself right now, a 12% annual return is incredibly high. Doesn't that usually mean high risk? How is this actually secure? It's a fair question. The security of this model rests on 4 specific pillars. First, 0 fees or penalties. Imperial Asset Management doesn't charge traditional management fees, so you keep your true net return. The math we just looked at isn't getting chewed up by hidden admin costs. Second, it's an inflation and recession hedge.
The underlying assets are real estate, which traditionally protects your purchasing power when inflation spikes and stays stable during downturns. Third, below market risk. You're not tied to the heart attack-inducing volatility of Wall Street. These returns come from income-producing real estate in high-growth markets like Florida and Texas. And finally, tax-deferred potential. You can actually use IRAs or pension funds for this, allowing that compounding snowball to grow without the massive drag of immediate tax liabilities.
This graphic right here really brings the whole shebang together. It's the source roadmap from Imperial Asset Management, and it lays out the entire story in one view. You've got the $500,000 foundation down at the bottom left, the 12% advantage, and that relentless monthly sweep acting as the engine. You can clearly see the visual step-up effect over those 5 years, all culminating in that nearly doubled principal of $905,000, a total portfolio value over $908,000, and a monthly dividend scaling past $9,000. It is just a masterclass in disciplined, insulated compounding. Which leaves us with this final thought. We're so conditioned to think that massive portfolio growth requires taking massive risks on the stock market. But what the Imperial Sweep strategy shows us is that mathematical discipline, paired with a secure, income-producing real estate foundation, can yield some truly extraordinary results. If a strict sweep strategy can nearly double $500,000 in just 60 months, without the stress of stock market volatility, how might a mechanism like this shift the timeline for your own passive income goals? It is a very powerful question to consider. Thanks for hanging out with me for this explainer, and keep learning.